What's driving this? That's a pretty big build-up in forward-looking revenue, right?
Yeah, first, thank you so much for having me here. So we're actually announcing that there's two products that crossed over 100 million in revenue, which is our Empower product, which is replacing Concur for travel and expense for most businesses, and also our business accounts, right, which can do operational, payments, deposit checks, all the kind of like traditional banking activities for our business in one place. And both of them crossed over 100 million. So now we have three products that crossed 100 million in revenue, and that's something that we're like really, really excited about.
So the 100 million in annual recurring revenue for the business accounts unit and Empower, Bloomberg sources saying that company-wide annual recurring revenue on track for about 500 million. What is it that makes Brex so attractive to startups that you've done business with since the fallout of SVB?
So I think there are two kind of main growth drivers. The first one is actually our enterprise segment of the business. So Empower, which is our spend management solution, has been serving customers such as DoorDash, Coinbase, Indeed, Glassdoor, Lemonade, etc. And I think both startups, mid-sized companies, and large enterprises have been attracted for our product because it's super easy to use for employees. You can just swipe your card and your expenses are done. It's extremely global, so it works all over the world for all your subsidiaries all over the world. And that's been like growing a lot as remote work grows and people are hiring internet, a lot of focus on experience. The second one is our banking product. And I would say that, yes, the regional banking crisis definitely had, we didn't know if it was going to be net positive or net negative for Brex. We got that question a lot. Now we know it was net positive. Customers did come and stay with Brex, and that also drove a lot of growth for the company.
Caroline, I think you and I will never forget that Friday where the SVB story unfolded. We did that special program, but we learned so much about how startups manage their finances, the type of funding that they seek beyond just raising capital from VCs.
And what was interesting was Silicon Valley Bank was so intertwined with the startup sector because not only was it offering lending, but offer in many ways venture debt. And Henrique, that's an area that you've been working in as well. How much are you seeing startups getting into cash burn, needing to get further money to deploy, but don't want to raise equity? Is venture debt still a big part of your business?
I would say that venture debt is a very small part of, it's definitely an experiment that we tried and we continue to do it in small amounts, but it's not mainly why customers come to us. The main way our business account customers come to us is because of their operational banking. So running payroll, wires, ACH, checks, making that kind of day-to-day banking. So a lot of startups, they keep a lot of their funds in some of the big banks, but they keep 1, 2, 3, 4 months of money with us to be their day-to-day partner that really understands them.
And where are these companies coming from? You're obviously focused on allowing these companies to be global, to travel, to grow. But are they largely US-based companies? Are you seeing this becoming much more of an international play?
A lot of them are global companies. So over 50% of the companies that we serve have global employees. All of them have US employees. We only serve you if you have some sort of US operation for a bunch of regulatory reasons. But a lot of them are global companies. And we serve, as I said, from startups that just were born to, customers that were from SVB, also to kind of like larger enterprises like Indeed, DoorDash, and Coinbase.
I have a sneaky suspicion there's a few more AI players looking to bank or being born at the moment. And Ed, I mean, every day we're discussing the exuberance around that.
Yeah, it reflects the conversation we had 24 hours ago, right, with Rex Salisbury. It's about what AI can do for existing fintech players. And I guess, Henrique, that's my question for you. How is AI going to boost your offering? Where are you investing to jump on the bandwagon, so to speak?
I think AI is going to completely transform our industry. And I would say there's a couple different places, right? You can think about it. Some in the employee experience. How can you make it even easier for employees to do their expenses or not have to do them at all, make all of that automated? We also announced earlier this year kind of like a CFO for everyone, where if anyone has any questions, you can just ask this chatbot and they will respond to you. So you don't have to waste the finance team's time with questions they already know the answer to. All the way to like accounting and operations, I think it's going to completely revolutionize and transform our industry. And we're investing very, very heavily into the development of new capabilities in AI. And I think we're over the next few months, you'll see a lot of very innovative things coming out of Brex.
Henrique, when does Brex go public?
We don't have a timeline yet. We're not against being a public company, in any shape or form. That being said, I would love to be a low volatility public company. We're not yet profitable, so we'll probably wait for that to happen before we go public. Other thing to remember is we're a 6-year-old company. We were started in 2017, so I would say, we don't have any pressure to go public yet. We're still quite young for a startup.
And we understand you don't have any pressure to raise new venture capital yourself. I'm interested, though, where you are in terms of the focus on being profitable, being CapEx positive, and all this sort of good stuff. Are you still trying to hire? Because you seem to be talking about developing, leaning into AI. How are you managing those costs?
Yeah, I would say that, we're still investing a lot in our go-to-market organization, because the product is having so much traction that, I think it is high ROI for us to invest in sales and marketing to acquire, more customers faster. So we are investing there, and our investors are really excited about it. And then in the second area is AI. I do believe this is going to be transformational and a step function change. So I think if you're a company and you're not willing to invest in AI, you're probably missing the next big shift. That being said, we do have a good business model. I think we have a plan to being, cash flow positive without raising any more money.